What's up, guys? Momama here with a weekly recap. Haven't done one of these in a minute. Just been very busy. I started trading futures again and just been doing a lot of stuff outside the market and in the market. So I've been quite busy, but the past 2 weeks also I haven't been trading too much just due to the price action has been crazy on higher time frames, lower time frames. I usually average between 10 plus, maybe around like 10, 15 trades a week. And I think last week I only got like five in. And then this past week, so 2 weeks ago, like five in, and then this past week, I got four in. So I've been cutting it down on the trades until, I've been taking only the best setups I see, I get. And that's how it should be, really. Get those best setups you see and then trade those. And it's not like I take 10, 15 trades that are not great setups. I believe, the trades I take are great setups, but I don't sit there and watch the price action as much as I have been. I just come in, wait for that setup. I go away, do my thing, spend time with the family and stuff, and then I'll come back. See if there's a setup. I'll scan the market again. If there's a setup, okay, I'll set some alerts. I don't have to sit there and just stare at the price action. I'll set some alerts. Once I get an alert, I'll come back, look at it. If it's there, hey, let's take it. Good RR, go ahead and trigger that. So starting the week, I took four trades, one loser, three winners. Not bad, right? Not bad. And that one loser was minus 13%, and the rest, I believe, were 20 plus percent. So let's go ahead and start with NIO. This is one I recapped on Twitter. Actually, I believe I posted a recap on this on Twitter, threw some screenshots in, and told you guys what I was looking at. So I love playing these tickers that you got a nice gap up right out the bell. They're just ripping. So what I like to do is I don't like to just short a guess and short, no matter what, even if they're overbought on the RSI, even if my the price action is gapped away from my EMAs, let's say, those are just additional convictions. What I really want to play off, my type of trading is mainly off key levels, right? Key levels, resistance and support, supply and demand. So what I like to do is I jump into higher time frames and look for some resistance. So what I did on NIO, I believe, was jump into the 30. Let's see, where was this at? So I believe this was the 20th. Okay, over here. So what I saw in NIO coming into here was this resistance over here. You can see how we formed some nice support up here at 9, right? At 9. So what you also had as well is a potential. You remember, I like leveling up my closes and my opens, right? The close and the opens I love. So I would put a level up there. But I set a level right there at 895, right? I put a level there. I triggered a short right there, and immediately we got a rejection, a nice pullback. I was able to trim some, keep the rest, that stop loss entry. I actually wanted to reshort, but I preferred to reshort this up at 912 into like 9, let's say 918, right? That's a great supply zone up here on the 30-minute time frame. One thing you do have to account for is sometimes these psych levels, these 9, 10, 950, 11, 1050. So account for those. Sometimes a price action does like to bounce off those levels. So what I was looking for is if we come up here, I'm definitely smacking shorts up here, and keeping my stop loss if we were able to break the whole break and hold the 30-minute this level on the 30-minute time frame. So I ended up just really taking the first trade. That was it, and I was trying to come up there for that one and reshort. I never got it. We tested the 9. We can go back into the 5-minute time frame and look at this. Let's see, got the 895, the 9, and then let's just delete that. That was the other level. But you can see here how we broke through 9, but even on the 5-minute time frame, we came right through. That's indicative of weakness right off the bat. Right off the bat, indicative of weakness. A lot of the Discord members know what I like to look at, and know how these levels play out, especially when you come down to flip into support. You fail to hold support. What weakness, right? You got weakness. You're looking for further downside. And of course, we were overbought, way overbought on NIO on the 5-minute time frame. I mean, straight ripper right at the bell. This was it, right? Yeah, the 20th. And you also, let's open the 9 here. There we go. So the 9 was about down here when I shorted. I shorted this up here at peak, and then we got to move down into the 9. Nearly hit it, never really came down and hit it, but the 9 was gapped away. That's, one other um, conviction I had was it's overbought on the RSI. It's gapped away from a 9 EMA. Why do I say that? Usually you come back and retrace, you touch your EMAs, right? Doesn't always happen, of course, but eventually on rippers, you do end up coming back and retracing, but you want to catch them off these key levels, So I ended up shorting it right here in case we never made the move up into 9. More than likely you end up making it, right? But I lined up a key level there. I was like, you know what? I'm going to take it. That's not too far out. I don't mind even adding up here, right? If we fail to hold, support. This ended up failing to hold support. I ended up closing the trade over here, half my position over here. I kept the rest at entry. That was a nice little winner. Let me see what I ended up getting on that trade. 25% over here on NIO. So that was it with NIO, right? That was it with NIO. We never got back up there, and that was it. So the Discord members know what happens at times when I do trigger these early. We're not quite at the psych level, right? This 9 level. Some of them actually wait, which was good. I know some of them took it where up here at the 9, and they held it for this nice move down. Came down into the 30, even broke through your 9, held. You like to see that. You're targeting move down into the 30, and some of them ended up triggering it here, which is great, right? I like to see that, right? They've watched my trades in the past, and they see that more than likely we'll come up and test this. Usually you get a bounce off the 9 after a ripper, and that's what you got, and then it came up and tested that psych level. So great trade there, and that was the only trade of that day. And then the next day I ended up taking Amazon. This was the loss. This was taken on the 21st. Let's go into the 21st. What was I looking at here? Where is this at? Right about there. Okay, I remember this. This was a doji at peak, I believe, right? No, not that one. Not that one. I think it was this one right here, the 21st. This was it right here. We got a doji at peak, right? We got a doji at peak. Okay, now what I did was you could see the resistance up here, right? You can see the resistance on Amazon right there. You could even jump into the hourly, I believe, and look at this. I think I even saw an hourly resistance level on this name on the 21st, which was right about, it was around 130. I took it right there. Okay, so check this out. There was a resistance level right there on Amazon here, right? So go back into the 5. Now, what we had was a doji at peak, and that's when I shorted it. This trade ended up playing out, but I had to respect my level of my stop loss. And what I was hoping for was a pullback, and then at least a trim, right? And I'm able to hold it into the next day. This ended up playing out, right? But I never did. I took it for a minus 13%. Stop out. I have to respect my because you never know what happens, right? I mean, there's nothing guaranteeing that we're going to gap down and just drop, right? We could have gapped up. It could have been worse of a loss, right? So I ended up taking it. I saw it break and hold somewhere, or I saw it breaking up here. And what I ended up doing was setting a stop loss in case we ended up because sometimes what happens is when you have a good level of resistance and you come back and test it, what happens? You get a candle like this, it just rips, right? And then instead of having your stop loss set, you end up suffering more of a loss, right? So what I ended up doing was I ended up setting a stop loss once I saw this. Once I saw the price action kept testing, and so I ended up setting a 13% stop loss on there, and ended up triggering, of course, off of this candle. But when I saw this price action coming out, I was like, okay, I'm happy this ended up triggering, right? Because it could have continued to rip, but ended up pulling back here and closing right above our stop loss level. But you could see the doji here at peak, right? I like taking these candles. For example, this one, that would have been clean if we played this, like we got this sort of pullback here. That would have been nice. I would have trimmed some there, right? Even this, check this out in the morning. You got a nice doji there and then a pullback. Nice doji there and then a pullback. Unfortunately, the doji I do decide to enter was this one off of the hourly too. It wasn't just off of, any type of resistance. Hourly, you can even see resistance on the 5-minute time frame off of this consolidation and then the drop. So it was a great setup. Unfortunately, it just didn't play out. Market also had an inverse head and shoulders, but I still triggered it. Why? Because these names do still pull back despite the market going up. What they end up doing, and what this one was actually doing, this looked great. Market was coming up. Amazon was just consolidating. Google on this same day dropped despite the market holding up or even moving up. Google had a nice pullback, a strong pullback. So I was thinking, oh man, this is a great setup. The indices are moving up. This isn't doing anything. So ended up though consolidating and then finally coming up. Just time decay on the cons ended up coming up and stopping me out for minus 32%. But that's a good RR. That's what you want to look for, right? I don't mind that loss. I don't mind that loss at all because it was a setup. It was a great setup, and I'll take it any day. But unfortunately, we ended up stopping out on that one. Next one, AMD was the next day, the 22nd. Let's see, AMD, where was this trade taken? 22nd at 10:05, right about. Okay, so yeah, AMD was pulling back despite the market on this day. I believe, if I'm not mistaken, the market was consolidating. The market started to come up. I believe I do watch the flow too, so I take conviction off the flow as well. I saw flow coming in on the indices, I believe, or not specifically. Actually, not the indices. I think it was specifically this name. I saw some large call flow come in on this name. And what you want to do is when you do see the call flow is line up your levels. This is nice support here. You can see this consolidation, breakout hold, fail to hold support. We spoke about it on NIO, fail to hold support and drop, right? So you can see this is a good level. So what I ended up doing is I triggered the trade, I believe, right there, or it's either this red candle or this red candle. And I kept my stop loss right here. I took, I believe, even next week's. I don't think I took weeklies on these. I think I took next week's. And this ended up being an absolute, yeah, I took next week's. I know that for sure because I ended up taking this trade for 25%, and it was an absolute ripper. This trade was an absolute ripper. I believe it was 25%. Yeah. But this trade ended up just continuously ripping. This was on FOMC. Now I remember, yeah. So it was FOMC and AMD was just ripping despite the indices just consolidating. And then what I loved about this trade is I like playing pre-FOMC price action at times if the setup is there, because sometimes you can set yourself up for FOMC, right? So if FOMC goes your way, this ticker will continue to rip. And that's what happened. I set a target. So I took this and I set a target up here, I believe. Where was it? I think I set a target up here at this resistance right there. And then my next target was up at 98. Yeah, that's what it was. 98 was my next target. So what I ended up doing is trimming some here, trimmed some there, and I held a little bit. And then when this ended up ripping, I actually closed I closed some on new highs and left one runner. And I ended up closing, I believe I closed that one actually for a higher, much higher than 25%. If I'm not mistaken, I think I'm probably, I mean, again, I took 2 weeks out, so they weren't going to move as strong as weeklies. The weeklies absolutely ripped, but I ended up taking this one on the move up. It positioned me perfectly for FOMC. FOMC moved our way initially, right? Initially moved our way. And then you got that nasty sell off. But, 72% actually. I closed that one at 72%. That was a ripper. That's what it was, not 25%. I think the majority was around 25%, but I ended up closing my last runner at 72%. Absolute ripper, absolute ripper. So the next trade. So again, I hope you guys got the idea. The gist of this setup right here was, you saw the call flow coming in. I lined up my support level. Great RR. We're not too far from my stop loss level, right? Which is a support. Consolidate, then started to rip. So my 9 is still over my 30. I like that too. And once we came back and reclaimed both the 9 and 30, this was a nice trade. I knew we were gonna hit this first target. We did, and then this one right away. And then after that, we just consolidated. And then absolute ripper, 72% on 2 weeks out. So you don't have to take weeklies, to get a nice gain, right? To get a huge gain, and allows me to size in trades too, and it's 2 weeks out, because it removes that emotions out in a way, right? It's not as volatile. You're not like staring at it. You're not like worried about it dropping 30% just like that. So great trade there. So high quality setups and. Along with the flow, right? That's how you watch the flow. So this was PayPal. So PayPal right here. Now so we've seen the PA. PA has been crazy lately, right? PA has been crazy lately. And I took this, let's leave this right here. So I took that into account, right? I took the crazy PA into account. So what I did was I ended up taking 2 weeks out on this as well. This ended up playing out for 21% on this trade. Absolute ripper. This ended up going 83% on 2 weeks out, right? It was next week's con. So I didn't play weeklies. I played next week's cons. What I ended up doing was I was patient for this. This ended up, dropping, bouncing, coming up, respected the nine. Some people might have took the short, which is understandable. When you are gapped away hard, you usually, yeah, especially if you're ripping into the EMA, yeah, people like to short this at times, and it's not a bad short, right? Why? Because you do have your gap level right there. That's not a bad short, but your gain was very minimal. It would have to be a really quick scalp, at least maybe trim most. But I didn't take it here. What I ended up telling myself is I'm going to wait for this gap fill. I think, the market will slightly push up and this will actually pull into this gap fill. So we have the 9 and 30 crossover. This is a peaky setup, 930 crossover, price action into that 30 EMA. Look at that, into that 30 EMA. And what do we have here? We have two levels you want to look out for. You do have a gap to fill there. We filled it. And then you have a gap to fill where? Up here. We filled it, right? We filled it. So now what happened is I was looking to keep so I took it right at the peak of this candle, I believe, right at the peak of this candle before this candle closed. But my initial stop loss was break and hold of 74.30. So once it did this, now check this out. We're 2 weeks out, right? This is why I tell you, you can still play it safe with with 2 weeks out. So I was thinking this thing is gonna fake me out. I've seen this happen, a lot of times. Especially the past 2 weeks, the PA has just been crazy. And I was looking for a market pullback. So on the indices, a pullback on the indices, and then this name to fake me out. So what I ended up doing was at this peak of this candle, 2 weeks out, I was down 6% only. 6% only. So what I gave myself was a 10 to 11% stop loss. What I ended up doing was setting a stop loss on my cons, 10 to 11%. I set it, I just left it. If it hits, it hits. Okay, that's fine. If it doesn't, it fakes me out. Hey, great job. I set a 10% stop loss. That's, and then the PA ended up going my way. Was you could see how we came back down, trying to flip down to support, failed. We closed below. You like to see that, and then just consolidated, and then the market started to sell off on Thursday. And I could tell right when this sold off, but we're going to head down into this target. This was my target. I trimmed most, and then we came down even below into this. So this would be another target. You want to watch for this. What you guys know how I like lining up my gap fills, right? So my gap levels, that is. And you can tell, look at this respect over here from where? From right here. This is another level, gap level right there, gap level right there. Price action respects it. So I ended up trimming there most, and then I ended up closing my position right there. Some members held, they tagged me. They're telling me, hey, this is going for a bag. Ended up at lows going for like 83%. So another great setup. And the thing I like about this is that we were 2 weeks out, 6% at peak, maybe 7% at peak, down, right, in red on the cons, and ended up ripping 83%. I ended up capitalizing for 21%. Not bad, right? Not bad on 2 weeks. That's actually a really good return. Those were the four trades. Let me know what you guys think. Great setups. I mean, sometimes you have to be patient, guys. I've seen people just linger in the market and make profit and throw it away, then try to make it back and even lose more. They just stay there and linger all day, and then they complain about their losses. And it's like, dude, if the price action isn't there, if you made your profits in the morning, just step away. Just step away. Find those, few high setups and play it. If you're feeling and the price action is great and you're feeling it, you're taking what? 1, 2, 3 trades and they're bangers, nice quality high setups, that's fine. That's understandable. But if you make your money in the morning and this price action is just crazy, right? We're seeing drops, we're seeing pumps, we're seeing drops. So it's a pump and dump short time frame, right? Even the higher time frames, it's a hard read. Even on the higher time frames, you look at the dailies, wick down, wick back up. So you guys find those high quality setups. I think this week though we'll have really good price action. So I'm looking to take more trades this week. But we'll see. We got to find those setups and just take those setups. Don't just try to guess up, down, sideways. Just play those levels, play those setups, and then call it a day. All right. Y'all be safe out there. Let me know if you guys have any questions. Hope you guys make some money this week. Let's get it.